Imagine this: millions of Americans retiring every year, cashing out their retirement accounts, while fewer young workers step in to buy stocks. A shrinking workforce, a graying population, and a potential tidal wave of selling pressure. Some economists warn this could be the biggest long term threat to the US stock market, even bigger than recessions, inflation, or interest rates. So, is America's demographic decline setting up a slow motion crash for the S&P 500, or can innovation and policy changes save the day? Let's dive in. The US fertility rate is now just 1.62 births per woman, well below the 2.1 replacement rate. Without immigration, the working age population will shrink. Meanwhile, 10,000 baby boomers retire every single day. For decades, they've poured money into stocks, but now they're becoming net sellers. That creates what some call the demographic time bomb. And we've seen this before. In Japan, Japan's population peaked in 2008 and has been shrinking ever since. The Nikkei 225's Japan stock market index still hasn't recovered its late 1980s peak. Aging, weak consumption, and limited immigration dragged down growth and valuations. Could America be next? But the US is different. Foreign investors already own about 30% of US equities. Corporations themselves have become the largest buyers of stock, repurchasing over $1 trillion in 2022. And US innovation in AI, robotics, biotech, and energy means productivity could keep rising even as the population slows. The S&P 500 isn't just about people, it's about profits. Two futures are possible. In a demographic drag scenario, low birth rates and slow immigration mean weaker demand, slower GDP, and muted 3 to 5% returns. In an offset path, America adapts, immigration grows, retirement ages rise, and productivity soars. In that world, US stocks remain the core of global investing. Policymakers have options: child tax credits to boost families, immigration reform to replenish the workforce, and education investments to enhance productivity. Markets themselves adapt too. Companies seek growth overseas, and US investors benefit. Demographics are a headwind, but not a death sentence. The question is simple: will America adapt or age into stagnation? What do you think? Can technology and immigration save the stock market from a population decline, or are we heading toward a Japan style slowdown? Let me know in the comments.